Welcome back to Worldwide Exchange. Despite dwindling recession expectations, investors have been forced to reevaluate their finances while navigating an unpredictable environment. A lot of people doing so with the help of an investment advisor. And CNBC has just released its 5th annual Financial Advisor 100 list, recognizing firms helping clients successfully navigate in uncertain times. We're joined by Andrew Grinstead, CEO of Leavell Investment Management, number 4 on this year's FA 100 list, and up 3 spots from the previous year. So, Andrew, congratulations on that upward trajectory.
Thanks, Contessa. It's really an honor for our firm, so we appreciate being recognized.
One of the things that I think is very interesting about the way your firm operates is that there doesn't have to be consensus on investment strategy, that you've made it clear that your portfolio managers come to the table, debate ideas, but you don't have to leave with all the same strategy. Can you tell me where you're coming together and have some consensus?
Yeah, sure. So, we're really believers in iron sharpens iron. And so, and we want our decision makers to be at the table with the client. And one of the areas that we're having consensus is, in the fixed income side, I think we're all in agreement of shorter duration and higher quality right now.
Where are you differing then? Where it sounds like if that's the one place that you can come together and see some agreement, there's probably a lot more areas where you're disagreeing. Sure.
No, I think if you put a bunch of CFAs in a room, you're going to have a lot of differences. And so, rather than sort of have consensus, we sort of duke it out a little bit, and we think that's best for the client. But China is an area that's really tough right now. And I think that there's sort of disagreement over what exposure we want to have in terms of asset allocation to China. I think you've got, some things on the positive side, really, in terms of valuation there. And it's a pretty beat up market. And we also think that they've got more room to stimulate if they choose to do so. But on the other side of the coin, they've got a real long-term demographic headroom. The property market's still a mess. And, I think with all the sort of saber rattling and geopolitical risks there, that creates a lot of caution as well. Let's talk a little bit about the CPI report due out this morning. What are you expecting, and how does that inform the advice you're giving your clients, Andrew? Sure. So I think, like you said earlier this morning, I think we're going to see a print in the 3.6 range for the headline CPI. I'd agree that core is going to come down a little bit, but really we think that stagflation narrative is going to sort of linger at least through the year, the end of the year. Really just looking at sort of year over year, the numbers that are going to be rolling off and the numbers that are going to be coming on. And so that's a tough narrative for the market because, there's still sort of this lag effect of what the Fed has done in terms of raising rates. So we think that puts pressure on the market. We think the banks are still struggling. You saw Truist announce that they were going to lay off some people. So we think that there's still sort of an economic, cloud over the market. And we think the CPI printing higher, probably, above 3.5 for the rest of the year, that's not going to look good. And the other thing I'd add is that, the political environment out there, we're coming into an election year, and, certainly one side is going to play that narrative, echo that high inflation because, that helps them. And so that's going to also, create that narrative out there that we're still battling inflation and yet the economy, with high interest rates, can't really move higher. Andrew, congratulations again on landing in the top 5 on our CNBC Financial Advisor 100 list. And